Welcome back. You're watching us here on Bazaar Morning Call. Let's get our first corporate conversation going. Anand Agarwal, who's the CFO at V-Mart Retail, joins us now. The three important talking points that we have, obviously, this good second quarter business update that the company reported, festive season sales and demand ahead of Bihar elections. So all these factors, what we're going to discuss. Anand, thank you so much for joining in. First, I have to tell you, in the first quarter, when your SSSG was 1%, you were quick enough to point out that ex-festive preponement SSSG was 5%. This time around, the SSSG is 11%. You did not tell us that was because of the preponement of Navratri. So when it's good, you don't tell us. When it's bad, you tell us X of that, it would have been that much. So tell us, let's start straight up. X of the Navratri preponement, what was the SSSG this time around and what's sustainable?
Mangalam, this is the first time we are having this interaction in quarter two. So this is the first opportunity I can have to tell you. Yes. I had in fact pointed out in my last quarter update as well that we will have an early Pujo this year. The festives are around 10 days to 15 days preponed this year. So we will have that impact going forward in quarter two. And we might also have a bit of that impact in quarter three as well. I think X of Navratri, X of Durga Puja, I think the growth still has been good while we delivered a 22% overall sales growth. But if I, nullify the impact of the early Durga Puja and Navratri, the growth would have been around 16%.
All right, 16%, not particularly bad. Last time you joined us, you did say that this festive season would be 20% growth. So, point to point, including Pujo and Navratri and the Sera that just went by, this year, festive season versus last year, do you think it'll be over 20% that you had earlier estimated?
We're still, looking at around 17 to 20, 22, 23%. It will be in that range. Very difficult to quantify at this stage because as of now, weather is playing a bit of spoil sport. While the festive is in full swing, there's very good customer traction that we are able to see on the streets. GST tailwinds have been announced, so that is really helping in terms of consumer sentiment. But otherwise, I think, but for the, late monsoons or, rough weather especially in South India and parts of, East India, I think we still are guiding towards double digit, around 17 to 20, 22, 23% overall growth for the festive.
Okay. Anand, hi. Morning. Just wanted to narrow down on what you mentioned with regards to GST. You did mention that you are seeing good traction coming in on GST. Give us a sense in terms of when we could probably see it play out in terms of your numbers. Most of the companies say that you'll probably see it Q3 onwards. And if so, to what extent?
I believe the GST impact for value retailers like us will be very limited. We traditionally play in the, average selling price field of around 300 to 500 rupees. Now, that's an area where GST has had very limited impact, only in the input tax credit. The maximum impact it has had is in the price segment of 1000 rupee plus, where our presence is very, very limited. But what this allows us to do is that we can now experiment a bit more in expanding our range in the 1000 rupee plus segment, where the earlier GST rates were around 12% and now they have got reduced to 5%. Having said that, I think the immediate benefit that we are definitely able to see on the ground is that the consumer sentiment looks very much positive. While it's also a mix of the festive, it's also a mix of the good monsoons that we have had this year. So there is good, expectation all around that, things are going to be good. I think the biggest beneficiary for us in the long term is going to be, around in the higher price segment. But I think the impact of that might only come from, in the medium to long term, not in the immediate short term.
All right. Hi, Mr. Agarwal. We can solve that problem with regard to not getting an update because you're not joining us too often enough. So let's speak more often. That at the side, what about store addition for the year? I think you were talking about 60, 65 stores. Is that on course? And also tell us about payments. How is inventory days shaping up? If you could give us a broad sense.
So I think on the new store additions, we are pretty much on track on 65. We already opened 40 in H1 this year. So 25 were in the last quarter. And I think from whatever updates that I've got from the team, I think they're looking at very robust pipeline ahead. In fact, October should be a very blockbuster month in terms of store openings. So we are looking at a very good pipeline and probably might exceed a bit on the overall new store opening guidance. As far as the inventory goes, I think we've always upstocked for the festive season. So this is the peak of the the peakest part of the festive season. Puja has just gone by. Diwali is just about to begin, and you have Chhath followed by that, and then you also have a good marriage season, and then you also have a good supposedly a good winters. So there's a lot lined up in quarter three. Quarter three is also our biggest quarter. So while we are very healthy on inventory, we are very comfortable on the inventory. But I think in terms of inventory days, probably quarter three, we should look at, around 90 days or so.
All right, 90 days would be an improvement from over 110 days that we have. But, just the SSSG, you said was 16% in the second quarter, ex of festive seasons, or rather sales value. Does a higher SSSG come at better margins because that increases store utilization, improves efficiencies? So do we see mid-teens sort of margins in the second, third quarter? And for the full year, what's your guidance? Last year was about what, 11.5%?
So definitely SSG is a very big driver of overall EBITDA growth. The bottom line has a huge leverage, operating leverage coming in if you have a good SSG. And I think the 11% SSG in this quarter will definitely help us, improve our bottom line. Quarter two normally is a small quarter, is always a loss-making quarter. So still the numbers are yet to be announced. So I can't really come on the numbers as yet. But I think on the overall full year basis, we should still see good amount of improvement for the full year because we're still looking at, mid to high single digit overall same store sales growth for the full year.
So Anand, if you had to just leave us with a broader trend in terms of what your exit rate would be for FY26 based on what you did in FY25, 17% growth is what you did in FY25 and your margins were at around 11.6%. Do you think you can significantly improve that? And what is the guidance that you can probably leave us with for the entire fiscal?
So as of now, Ekta, I'm definitely looking at improved growth, both in terms of SSG, also in terms of total sales growth, which was 17% last year. So we should definitely improve on that as well. And if both these things happen, I'm very, very confident that we should also be able to improve the EBITDA margin. Now, by how much is anybody's guess. As of now, I can't really guide on a number, but definitely we are looking at slightly improved, sales growth as well as EBITDA margins from last year for the full fiscal.
And the numbers for Unlimited and V-Mart have merged, right?
Yes, they've always merged. And in fact, Unlimited is now doing very well for us. And we are very, very optimistic on opening more number of new stores in South India under Unlimited. Because as that format has turned very profitable and it's now, it should be the future engine of growth for us.
All right, Anand, always a pleasure speaking with you. Good fun ribbing you every once in a while on the festive season, etc. as well. But irrespective of the shifts for on an annual basis, we wish you good growth, good margins from a larger standpoint because of Tier 2, Tier 3 India as well. Thank you so much for joining in. Have a good day ahead.